Hey guys, good morning. It's Angelo Christian Financial. Thank you so much for watching our podcast, Real Estate Insider, where America goes for funding for the last 20 years. Your nationwide commercial and residential lender. Today we're talking about commercial multifamily loans and the different types of commercial multifamily. You know, right now the real estate market has rebounded. It's hotter than heck. We're getting ready to go into 2022, and a lot of people are looking for alternative sources of income. Mailbox money. We talked about this on our YouTube live, our podcast last week, how to create extra income, mailbox income, passive income through rentals and multifamily is a great strategy, a great solution on how to build your portfolio, build your wealth, build your family's wealth. Real estate has been here for the test of time. It's going to be here way after all of us are gone. And people are always going to want to rent, okay? No matter where you are, whether you're in a major metropolitan area, you're in a college town, people are always going to need a place to rent. And multifamily is one of those great things to create rental income. And we specialize in commercial multifamily. And today we're going to be talking about the different types of multifamily loans that there are. There's bank multifamily, where you can get a bank loan through a commercial bank, or you can get an agency loan like through Fannie or Freddie Mac. And so these are both great loan products depending on the type of situation that you're in. We're going to talk about some of the benefits and the requirements of using both of them, and how this could help you if you're trying to purchase properties that are already stabilized, that are throwing off cash flow. These are both really, really good loan programs. Generally speaking, a lot of people, when they're first getting started and you're a new investor, you have to take out a loan through a bank first before you can qualify for agency financing, because for agency financing, you typically have to have some experience and a portfolio under your belt before the agencies will actually approve you for funding. So basically, the biggest difference is with bank financing is that the loan terms, they're not as favorable as Fannie Mae, for example, but it's a great way to get started is to get a bank loan. We specialize in commercial bank loans, but you can also get a loan from your bank directly. So the biggest thing to know is the requirements for these type of loans. Generally, for a commercial bank loan, they're looking for at least a 700 credit score. Okay, you have to have a middle credit score. Your FICO score has to be at least a 700. You generally have to put at least 20 to 25% down to purchase the property. So if you're buying $1 million commercial multifamily, you have to inject $250,000 down. Then you have closing costs on top of that. Closing costs are usually about 2%, 1 to 2%, so about $20,000 to $50,000 for closing costs. You're going to pay for an appraisal. The appraisal can be anywhere from $2,000 to $5,000 for the appraisal. You may have to pay for an environmental report, depending on the size of the loan or the property or the bank. It's a fully documented loan, so they're going to check your credit. They're going to check your personal financial statement. They're going to check your tax returns. They're going to do a full analysis on the rent roll and the income of the property. And generally, these loans are anywhere from 20 to 30-year amortizations. They're normally principal and interest. Normally, banks will not do an interest-only program. They normally want principal and interest. Generally, the terms are, it's a 5-year term. That means that within 5 years, you're going to have to either pay off the loan or refinance or extend the loan. They will not do a straight 25 or 30-year fixed loan. Those loans usually mature within 5 years, so you have to refinance or move it to a different product. So these are some of the things to be mindful of, but they will give you a shot if you're a first-time investor and you have the funds for the down payment. Now, the underwriting, what they're really looking for is that the property has a really good debt service coverage ratio, ideally a 1.5 or greater. That means that the rents should be 50% greater than the total cost of the debt, the taxes, the insurance, and the maintenance to manage the property. You should have a cushion, ideally at 50%. We're not saying you have to have 50%, but it could be 25% usually is the minimum of how much greater the rents have to be relative to the debt service coverage, okay? So this is an important thing to look at when you're looking at purchasing properties. Generally, if you're an investor, you're already looking at cap rates that you want at least 10% or higher so you can have an attractive yield on your property. So they don't underwrite you as much, okay, as your financials and your specific debt ratio, but they're looking on the underlying asset that you're investing in. Okay, this is a very, very important thing because what they're concerned with is if they had to take over this property, can it pay for itself, can it sustain? So the primary underwriting is on the asset, the property, and the secondary underwriting is on you, which is different than residential mortgages, okay? So the biggest difference with bank loans and agency loans is that the underwriting is very similar, except that, like for example, if you had losses on your tax returns, Fannie Mae isn't really as concerned with that because it's a non-recourse loan, whereas the bank loans are usually full recourse, okay? So they're not as concerned with your personal financials as they are as your experience. You have similar portfolio size. Like if you're trying to buy a $10 million property and you've never owned anything more than $1 million, Fannie Mae will not fund that. Okay, so you have to make sure when you go to Fannie Mae that you have similar portfolio experience, that you funded deals that were similar to what the request is, or you have a partner or a partnership that has that type of similar experience. Because Fannie Mae isn't going to let you go from 1 million to 10 million without having the experience to do that. The other thing is they're looking for is net worth. Your net worth usually has to be greater than or equal to the loan amount. If you're doing an $8 million loan, you better have an $8 million net worth. If you have a $2 million net worth, you probably won't get financing through Fannie Mae. The biggest advantage of doing a Fannie Mae loan, again, it's non-recourse, so they don't come after you if the deal goes sour. But aside from that, the interest rates are usually about a point to 2 points lower than a bank, and you can do interest only. So you have a huge cash flow, a huge NOI, and you can make a lot of profit by doing a Fannie Mae commercial agency loan for a multifamily. So basically, for example, you could get like a 2.8 rate interest only, so a lot cheaper interest rate than a bank, and it's interest only usually for 10 years. So it's an awesome program. Very attractive for investors. A lot of very big investors use agency financing because of how attractive it is. But the requirements are more stringent, okay? They want to see that 700 plus credit. You have to pay for, usually the upfront cost. You have to put at least usually 20% down, sometimes more. You have to pay for usually appraisals, environmentals. You have to pay to lock your rate. You can normally pay 1 to 2% upfront during the loan process to Fannie Mae. Okay, so they're not cheap loans by any means, meaning that you're going to have costs associated with getting the property, but the loan is phenomenal. There's no loan that can beat it. All right, but remember, Fannie Mae, what they're looking for is at least deals that are $1 million or higher, occupancy rates at least 90% or higher, major metropolitan areas. Okay, so we'd love to help you with any type of commercial multifamily. If you're in the market, we want to hear from you. We're a nationwide commercial lender. You can call or text us at the number above, the 832-431-6331. We'd love to hear from you. You can text us at that number. If you're looking to we also do bridge loans. If you're trying to do rehab multifamily, we have investor lines of credit for bridge loans. We can do purchases, refinance cash out. We want to hear from you and be your lender, your go-to for commercial multifamily. So thank you so much for talking to Angelo Christian. Check us out every Thursday, 7 p.m. Central. Talk with Angelo Live. We love to hear from you. So please check out my next video, and thank you so much. Have a great day. Bye-bye.